Something just changed quietly, and most people over 60 have absolutely no idea it happened. The federal government approved a new banking rule this March, and it directly touches how your Social Security payments are processed, protected, and accessed inside your bank account. This isn't political noise. This isn't fear-mongering. This is a real, documented policy shift, and the banks are already adjusting their systems right now, while most seniors are still sitting at the kitchen table, completely unaware of what is happening around them. And here's what nobody is telling you straight. This rule affects automatic deposits. It affects overdraft protections tied to benefit payments. And in some cases, it affects how quickly your money is actually available to you after it lands in your account. The Social Security Administration didn't send you a letter. Your bank didn't call. But the change is real. It's active. And it starts affecting accounts this very month. So before you check your balance, before you pay a single bill, you need to watch every second of this video, because knowing this could save you from a financial mistake that takes months to undo. Stay with me. This matters more than you think. That quiet Tuesday morning, when everything changed. Let me take you back just a few weeks. It was a quiet Tuesday morning in Washington, and while most Americans were sipping coffee, reading the headlines, or scrolling through social media, a regulatory update was quietly finalized that would ripple through every single bank account tied to a federal benefit payment in this country. No press conference, no breaking news alert, no push notification on your phone, just a policy change, signed, stamped, and sent down the chain to financial institutions across all 50 states. And right now, at this very moment, millions of seniors, retirees, and beneficiaries are going about their daily routines, completely unaware that the rules governing their money have just shifted beneath them. Rules that changed how their hard-earned benefits can be accessed, protected, or temporarily frozen. This is not speculation. This is not rumor. This is fact. And it is affecting real people right now in real ways. You deserve to know the truth. All of it. Now, I want you to understand something before we go any further. I am not here to scare you. I am not here to push you toward panic or make you feel like the sky is falling. That is not what we do here at Senior Security Update. What we do here is talk truth. Plain, honest, no-nonsense truth. And the truth is this. When the government changes a banking rule that affects how Social Security payments, SSDI benefits, or SSI funds are handled, you have every right to know exactly what changed, why it changed, and most importantly, what it means for the dollars sitting in your account right now. These are your benefits, your lifeline, your money that keeps the lights on, the groceries in the kitchen, and the roof over your head. You deserve clarity. You deserve transparency. You deserve actionable information that you can actually use. So let's start at the very beginning. What this rule actually says. The rule approved this March falls under updated federal guidelines governing how banks must handle electronically deposited federal benefit payments. That includes Social Security retirement benefits, Social Security disability insurance, commonly called SSDI, and supplemental security income, better known as SSI. These payments are not optional extras. They are not bonuses. They are the financial foundation for tens of millions of Americans every single month. And when rules surrounding those payments change, the stakes are incredibly high. Rent still needs to be paid. Medications still need to be filled. Groceries still need to be bought. Every person relying on these benefits needs to understand the changes immediately, because even a small shift in bank handling could create major disruptions to daily life. So here is what the rule actually addresses. For years, there has been a long-standing protection in place that prevented banks from allowing certain garnishments, levies, or other withdrawals to touch your Social Security funds, if those funds were deposited within the past 60 days. That protection exists because Social Security is considered federally protected benefit income. It is not treated the same as a regular paycheck. It carries a unique legal status. And that distinction matters enormously when debt collectors, creditors, or judgment holders try to access your funds. The March update refines this system, tightening the procedures banks must follow to review and flag protected federal benefit funds before allowing any withdrawal, garnishment, or hold to proceed. It is about accountability. It is about making sure your money is treated correctly every single time. What this means practically for you today. Now stay with me, because this is where it hits home. What this means practically is that banks are now under stricter obligation to perform what is called an account review process the moment any garnishment order lands on an account receiving federal benefits. In the past, banks were inconsistent. Some would freeze the entire account immediately and sort things out later, leaving the account holder, that is you, scrambling to prove your Social Security funds were federally protected. People missed rent payments. People couldn't buy groceries. People sat on hold with bank representatives for hours trying to explain that their own money, their benefits, should never have been frozen in the first place. That happened. It still happens. And it is completely wrong. This update doesn't just tweak the rules. It changes the responsibility. Banks can no longer take a freeze-first, ask-later approach without consequence. They must verify the protected status of federal benefits before acting. That verification process is now standardized, ensuring fewer errors, fewer unnecessary account freezes, and a clearer path for beneficiaries to access their funds. It is about reducing unnecessary stress, protecting essential income, and holding financial institutions accountable for proper compliance. This is national. Every state, every bank. What is also critically important to understand is just how widespread this is. Every bank, credit union, and financial institution that handles federal benefit deposits is affected. We are not talking about a single state or a handful of banks. This is national. From coast to coast, beneficiaries who rely on Social Security and SSI are impacted. Millions of accounts, millions of lives. And the potential for confusion or missteps is enormous if people don't understand the change. Knowledge is power here. Being aware of the rule and knowing your rights is the very first step to making sure your money stays protected. And here is the critical takeaway. This isn't just a technicality. This isn't just a small policy tweak tucked into a legal bulletin somewhere in Washington. This is about the security of your income, the integrity of the financial protections guaranteed to federal beneficiaries, and the daily reality of millions of Americans who depend on these payments to survive. When the bank makes the mistake, and you pay for it. There is another layer to this conversation that deserves some serious attention, and it is flying completely under the radar right now. Overdraft policies. For years, banks have been allowed to apply overdraft fees to accounts, even when the negative balance was created by an erroneous hold or garnishment that should have never been applied to protected Social Security funds. Think about that for a moment. Your money comes in. It is protected by federal law. A creditor sends a garnishment order. The bank freezes your funds incorrectly. Your automatic bill payments bounce. And then the bank charges you overdraft fees for those bounced payments. You did absolutely nothing wrong. The bank made the mistake, and yet you are the one paying the price, financially and emotionally. This updated rule includes language that pushes back against exactly that practice. It signals that banks must be more careful and more accountable in how they handle these situations. And it opens the door for account holders to challenge those fees and demand refunds when the error was on the bank's end. This is a real and meaningful shift, and you need to know it exists. I want to talk to you directly. I think about the people watching this channel, and I know many of you are living on a fixed income. I know that when your Social Security check comes in, you already have it mentally allocated before it even hits your account. This bill, that prescription, the grocery run, the utility payment, there is no extra cushion. There is no fat to trim. Every single dollar has a job. And when something disrupts that flow, it does not just create an inconvenience. It creates a crisis, a real, stressful, keep you up at night kind of crisis. And I want you to know that I take that seriously. The people making these policy decisions in Washington need to understand that for tens of millions of Americans, Social Security is not supplemental income. It is the income. And any disruption to that income, no matter how technical or bureaucratic it may seem on paper, has real human consequences. That is exactly why staying informed matters so much, because the more you understand how these rules work, the better equipped you are to protect yourself. Concrete steps you can take right now. Let me give you something concrete. If you receive Social Security payments via direct deposit and you also have any kind of outstanding debt, whether that is a medical bill, a personal loan, a credit card balance, or even an old utility debt, you should be aware that creditors can and do pursue garnishment orders through the courts. Most of the time, your Social Security funds are protected from those garnishments. But the process of enforcing that protection is not automatic in every situation. It requires your bank to correctly identify and shield those funds. And now, under this new rule, there is significantly more legal weight behind requiring banks to do exactly that. But again, knowing this means you can act if something goes wrong, rather than simply accepting an incorrect hold on your account as if it were inevitable or unavoidable. So here is what you should do right now. Monitor your account closely every time your benefit payment is deposited. Know your balance before and after. If you ever see an unexpected hold, freeze, or fee, do not accept it silently. Contact your bank in writing. Ask them specifically to identify what funds are protected under federal benefit protections. And if they cannot give you a clear answer, escalate. You have that right. Protect yourself from scammers. This is critical. There is another layer to this conversation that I think deserves honest and direct attention. A lot of seniors right now are receiving calls, emails, and letters from people claiming to be financial advisors, bank representatives, or government officials who want to help them navigate these new banking changes. I am going to say this as plainly as I know how. Be very, very careful. Anytime there is a legitimate policy change that affects a large population of people, the scammers come out within days. They see an opportunity. They know that people are confused and looking for answers, and sometimes willing to share personal information just to get clarity. Do not give your bank account number, your Social Security number, your routing number, or any personal financial information to anyone who contacts you unsolicited about these rule changes. The Social Security Administration will not call you out of the blue about this. Your bank will not send you an urgent email asking you to verify your account details because of a new rule. Those are scams. Hang up. Delete the email. And if you are unsure, walk into your local bank branch in person and ask a real human being face to face. The bigger picture. What is really happening in 2025? Let me bring this back around to the bigger picture, because I think there is something important happening here beyond just this one rule. What we are seeing in 2025 and now into this year is a gradual but very real shift in how the federal government is rethinking the financial protections around benefit payments. There are ongoing conversations in Congress about further updates to how Social Security funds are classified, protected, and distributed. There are proposals being debated about modernizing the direct deposit system. There are discussions about what happens to benefit payments when banks fail or merge. All of this is in motion right now. And the people who will be best served by these changes, and best protected when they are implemented imperfectly, are the people who are paying attention. Zane always says that personal finance is 80% behavior and 20% knowledge. But when it comes to protecting your Social Security income, I am going to flip that a little. Because here, knowledge is the behavior. Knowing what rules apply to your money. Knowing what your bank is legally required to do. Knowing when to push back and how to push back. That knowledge is what protects you. It is what keeps your household running smoothly, even when the institutions around you are slow to catch up with new regulations. The gap between law and reality. Here is the part that nobody is talking about, and the part you really need to hear. Just because a rule exists does not mean every bank will implement it perfectly, immediately, or with any kind of transparency toward you as the customer. Banks are large institutions. They have compliance departments, legal teams, and internal procedures that take time to update. And in that window of time, between when a rule is approved and when your specific bank has fully implemented it at the branch level and the systems level, there is a gap. And in that gap, mistakes can happen. Your account could still be affected incorrectly. You could still face a hold or a delay that should not legally be happening to your protected funds. So what does that mean for you right now, today, this month? It means you need to be proactive. It means you cannot afford to sit back and assume your bank is handling everything correctly just because the law says they should. I have watched people lose sleep, miss bill payments, and lose peace of mind because they trusted that the system would work perfectly on their behalf without them doing a single thing. That is not how it works in the real world. In the real world, you have to know your rights, and you have to be willing to speak up and use them. You earned every dollar. You are not powerless. You have worked your entire life for these benefits. You have paid into this system for decades. You have earned every single dollar of that monthly payment, and you deserve to have it protected, accessible, and handled with the respect it deserves. This March banking rule is a step in the right direction, but steps in the right direction still require you to watch your footing. These updates exist because mistakes have been made in the past, because protections were sometimes ignored, because the system itself required refinement. But knowing the rule alone is not enough. You must act. Monitor your accounts. Ensure that your bank is following the process correctly. The update empowers you with the knowledge to demand proper treatment of your benefits. It gives you the tools to prevent unnecessary freezes and to hold financial institutions accountable. And that is not a small thing. That is everything. Final message from Senior Security Update. So keep watching, keep asking questions, keep staying informed, and do not ever let anyone, not a bank, not a creditor, not a government agency, and not a scammer on the other end of a phone, make you feel powerless over the money you earned. Because you are not powerless. You are informed, and informed people make better decisions, protect their finances more effectively, and sleep a whole lot better at night. That is what Senior Security Update is here for. We talk truth, we protect what matters, and we are just getting started.